The Fed shocked the markets with an extremely hawkish outlook. So as you can see, the net result of that is a red across the board crypto bubbles chart over here. But on the hourly, some of the coins have already started to bounce because from a technical level, we still are technically near a support zone, which is why some of the coins are bouncing. But the question you may be wondering, is there going to be continuation to the downside? And is it going to be much, much lower for the next couple of days? Well, we'll cover that in today's show. There's some massive events that have recently unfolded. So let's get straight into it. And one of the main things I wanted to outline is around Mt. Gox over here. So you have 𝗕𝗆𝗃. He says, crypto down a bunch of FUD. Gox isn't coming for many months. Shanghai is priced in. Voyager's nearly done liquidating. Regulatory, the worst is likely behind us. Meanwhile, we are making real progress towards a spot Bitcoin ETF approval this summer. When do we start pricing that in? So this is the new pivotal thing that started to take place, is all around the spot Bitcoin ETF. So it's something definitely to keep an eye out on. And I have mentioned before that if you are looking, we actually looked at it yesterday at the Grayscale Bitcoin discount versus premium. And if you start to see that discount close, that could be something that would create some buy pressure on the markets. So it is something important to look at. And he goes on here to say that NRD remains long GBTC, ETH, and ETCG. In our opinion, the discounts represent very strong risk to reward investments given multiple potential avenues to value realization. Think it's likely that the SEC loses their court case. Yes, they can appeal, but they are starting to look really bad, and an ETF approval is actually a chance for them to look like they aren't just anti-crypto, whilst also further regulating crypto. So basically, they can approve the ETF, therefore they have a means in which they can regulate crypto a little bit easier and then not look so bad and embarrassed with the way that they've been reacting. So he says, we have consulted many experts and feel the ETF approval this year is a real possibility. Furthermore, even if they don't approve it, our feeling is the moment that Gensler is gone, Gary Gensler, then an ETF becomes quite likely. If nothing else, there is a good chance this happens after the 24 election, so 2024. And then he says we are willing to wait until then if necessary. So I found that interesting because that kind of lines up right with the halving cycle, which is also coming up around then, right? So halving cycle happens in May of 2024. And it's always interesting when you line up the charts and these fundamentals and how you can see a potential catalyst coming at a later stage. You know that sometime around that halving event, if history holds true and the halving cycle holds true, then you expect price to rally into that event. So everyone always wonders, well, what is going to be the catalyst for that particular cycle? And every cycle there is a catalyst. So maybe for that cycle, it is going to be a Bitcoin ETF approval. Let me know in the comments, what do you think? How do you guys feel about that? I know some people say no chance. Some people say absolutely, it sounds legit. And let me know if you are here. I see Nick Lambert says still here. Banter Girl, welcome back. Brandon, welcome back. Let me know if you are here. Smash the likes as well to get the algorithm going. So I also wanted to update you in any case on this chart over here to let you know kind of where I stand, right? Remember, we had a specific plan that was outlined with regards to this, and the plan was this. Did I delete that part of the plan? Oh, here it is. Okay, let's just expand that for you. So this was the plan all around the halving cycle. We looked at dollar cost averaging 25% of our capital over an 18-month period, which essentially started from somewhere back in November, and that leads all the way up into the actual halving. We dollar cost averaging into that event, 25% of our capital. The other 25% was meant to be entered at key horizontals, of which we got some of our entries in around that $15,000, $16,000 zone using a grid strategy on BitGet. The rest, we had orders laid low, but the price didn't quite get there. The other 50% we reserved for an uptrend. So I entered that 50% at 21,500, which is basically where I predicted that the next high low would take place. Of course, price is currently coming down towards that zone now. If price, and this is the reason why I'm mentioning this to you, if price starts to close underneath that, and the uptrend gets negated, of course, I'm going to take out that 50%, which was entered on the high lows. I'm still holding the positions that I bought around that 16K level, which was 8%. Remember, there were 3 different entries that we were looking at. So we were entering 8% at 16 to 15K, the other 8% to 10 to 12K, and the last 8% if we got as bad as 9K. So that means that currently entered into the market, I'm a little bit over 50% based on this entry as off the higher lows. My stops are at break even, so I won't lose any money over there, and the dollar cost averaging is continuing. So do keep that in mind. There is a link to this. If you're someone new to the channel and you've never heard of this or seen it, there is a link in my, or it's pinned to the top of my Twitter. Go to my Twitter, so look at the link below so you go to the right one and not a scammer's account. And then you can read through the whole thesis behind this idea that I have over here. All right, so Zahi says over here, interesting narrative change. I don't know what winning here means for ETF conversion to spot, but this would essentially remove the Genesis DCG overhang. Remember, there's that massive risk over there with DCG and Genesis, whereby they would have to sell the GBTC and they would hit the market, and he says, and open a flood of institutional capital. So basically it means that there is the possibility that you can have institutional capital coming in, and he says lots of positive headlines through this conversion process. And then Mike Alfred as well, whose opinion I often value and respect, he says, after listening to that disaster for the SEC, I have to believe that Grayscale now has a 70% chance of winning in this appeal. GBTC would have a pathway to convert to net asset value, and all the retail trust holders would become untrapped. Remember, those guys are sweating. They're trapped in those positions because they didn't expect that you'd get such a big discount. Remember, the GBTC was always at a premium, and that premium continued to grow. People thought they're making a smart trade, and then it went into a discount. So that would untrap those participants. 2023 could be big for Bitcoin and Bitcoin derivatives, he says here. And he says, I'm holding more than 240,000 shares of GBTC, but I may need to add here bidding. The thing that's so interesting is that GBTC may actually decouple from BTC itself, as it trades primarily as a proxy on the SEC's losing case. Lots of ways to win here, even if BTC doesn't go up a lot, but he thinks that it will. And I thought that's interesting. If you go look over here, GBTC essentially pumped. So in relation to Bitcoin, let's zoom in over here, if you compare this to the Bitcoin chart, because remember, they look almost the same if you look at them chart wise. So this would have been where Bitcoin now tagged that 25K level. And you can see yesterday it smashed through that level right above that zone. So showing massive signs of strength. Currently, it's up 9.6% on the day. And yesterday, we were looking over here at the Grayscale premium. And if you take a look at that now, that is starting, or at least the discount is starting to close slowly but surely. And this, when you think about institutional players, right, they would want to see that this is starting to trend back towards the upside, because why would they buy Bitcoin when they could just buy GBTC? So that could be a potential catalyst. And Wolf of All Streets over here shows it nicely. He says it just broke its yearly high. If you have a look over there, that's GBTC on the left-hand side. And he has Bitcoin still lagging behind the actual Bitcoin that we have, spot Bitcoin. So Avi says GBTC ETH is once again up on the day, where BTC ETH are flat. Oral arguments referenced below is going well. And he says judges are questioning the validity of the SEC's arguments against spot ETF. And then he has an interesting theory over here. He says there is an ongoing debate about the effect of the spot ETF. On one hand, it does allow a significant portion of people to invest in Bitcoin, which historically have been kept out. But then, on the other hand, it unlocks billions of dollars worth of BTC held in the GBTC trust that could hit the market. So let me know in the comments, what do you think? Do you think if they approve a Bitcoin ETF and it gets converted, that basically you would have billions of dollars worth of BTC, which is held in that trust, which could hit the market and add sell pressure? I personally don't buy into that thesis, although Avi has been phenomenal at finding holes within different trading, basically trading strategies, and he always has great ideas. I don't think that will happen, and the reason why is because most of these guys that bought into the GBTC trust, they were buying with an exceptionally long time horizon. So I don't think that they were panicking that much in terms of the discount being in place. A lot of them were adding this to their retirement annuity accounts for basically 10 to 20 year holds. Therefore, I don't think that if it converts that they're suddenly just going to want to sell because they're a little bit underwater now. These are mostly visionaries that are holding for very, very long periods of time. So also in other news, if you do look at yesterday, of course, the Fed hit us with a very hawkish speech. And Mohammed says over here, so much for the repeated dovish mentions of disinflation at the last press conference. Fed Chair Powell prepared comments now tilt to the hawkish side, including the quote below that will go viral. Stocks and bonds sell off as they wait for his response to senators' questions. And that quote was, as I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. And that basically means that obviously once we do get that economic data and it does get released in the days to come and the weeks to come, there's a high probability that they're going to raise the interest rates a lot higher. And if you look over here, Jim shows that Powell just finished. And here is the updated probability now that the Fed will hike 50 basis points next week. So it's again going into that scenario of much higher rates for longer. And here you can see the massive changes that took place yesterday, exactly 1 day ago. There was a 68% chance that it was going to be a 25 basis point hike and a 31% probability or 31% chance that it was going to be 50. Now suddenly it's flipped and you have a 73.5% chance that they're going to raise 50 and only a 26.5% chance that it's going to be 25. So enormous jump over here in the rate hike probabilities. And the question that you may wonder is, well, then is it all over? Well, if you look over here from HAWKISH, he says, yeah, the S&P versus the Fed funds rate. It looks like the new narrative is higher rates may be here for longer, which is bad for equities, right? Question mark he puts over there. The market has begged to differ. Just look at the gains during the rate hikes since 1988. And he shows, yeah, that's when the Fed funds rate was still going up massively. And yet from 1988 to 89, the market rallied 50% off of that. In 94 to 2000, it rallied 233% off of that. 2004 to 2006 over there, you have 45% and then 54% from 2016 to 2019. And then 2022 to 23, currently we negative 13%. So basically there is a probability that the market could still rally, which is why I always say, focus on the charts, right? Focus on the charts. Currently, yes, we're at a pivotal point. The market's on a knife's edge and bears are moments away from taking back full control and sending prices all the way down to the range lows for Bitcoin. But if the chart does remain postured towards the upside, you don't want to fade the trend. The trend is your friend until the end of that trend. So you want to be holding long if the charts are telling you to hold long. We also looked at yesterday the futures for Bitcoin alongside the S&P 500, and we said there would be some sort of convergence between these charts. And is it going to be Bitcoin up first or S&P down? It looks like the market has decided, and S&P 500 is coming down to converge back into these lines over here because these mostly remain correlated for longer than not. Okay, looking at the S&P 500, you have a very, very clear level of invalidation. I'm now talking to the higher time frame guys, right? Everything starts to change on this chart when you take out the mid-range and the recent lows that we set over here. You can see it very, very clearly. Mark it off on your chart. The S&P 500 futures chart over here, you got the wick at the bottom, 39.25. If the market starts to come back below that and you lose this, that is going to have been one of the biggest bull traps ever. I think Capo made a tweet about that. Capo, we haven't heard from the poor guy for a while, but he said biggest bull trap ever. Come below that line over there, and it is the biggest bull trap ever because then you're going all the way back down to the range low, most likely. And then the question is, will you even hold that? At that point, all these long-term targets which we previously had come back into play. What are the long-term targets? This was always the main target since I began with Crypto Banter here and started these shows. This has been the main target. I'm willing to adapt when the market tells me to, but if you come break below that range, that mid-range level, this does potentially come into play again, which is the pre-COVID levels. Now, I'm not flipping bearish, by the way. I'm not flipping bearish yet, guys. I still am sticking with the exact plan. It's really simple. We have to adapt with the market. If you do want to trade that, by the way, look, I took a trade on gold. Here's gold on PrimeXBT. We are also in a trade on the S&P 500 in a short. I gave it on yesterday's show. I also dropped it into the Discord, and it was given in the Daily Candle newsletter. So if you missed it, the only person you can blame is yourself. The trade worked out almost perfectly. Our stop was originally higher up. It was over here. Yesterday, I outlined that now it's time to move it just above that wick over there. You don't want to see price come back above there. And there it is. Basically, I would consider this TP1 hit halfway through, and then you're looking at TP2 all the way at the bottom towards the bottom of that wick over there. If you do want to take these trades, now this one's a little bit too late. You can't enter it, but use the link in the description below to PrimeXBT. They offer all these things like gold, like S&P 500, currency pairs, commodities, if you do want to trade other things. Okay, VIX. The VIX had a small tick up. So small tick up or any pressure towards the upside on the VIX creates downward pressure in risk on assets. And this is why the VIX is something that's worth watching only once it gets into these really, really low territories. Because if a little expansion on the VIX like that, which was only 5%, create such a massive sell-off in stocks and crypto, can you imagine when you have a proper expansive phase in the same way that you saw all the way back over here, these big moves over here? Then you get back above that 30 risk line. That's when you get into very, very dangerous territory. So keep in mind that now there is a lot of risk that this is going to expand off of here. And if the stock market can't reclaim key levels, that's going to mean trouble. Another thing that could be trouble is if you look at this from 𝗕𝗆𝗕𝗏, they basically track wallet movements, and this is a lot of Bitcoin over here. So it's 49,000 Bitcoin worth, which is basically $1 billion. It's moved from respective wallets, which are related to US government law enforcement seizures, which happened probably from those Mt. Gox days, and it's been transferred to Coinbase. So it is something that's worth noting over here. They're probably not sending it there to buy altcoins or to do yield farming. I doubt it. So something to take note of over there, that there could still potentially be further risk towards the downside over here if crypto doesn't bounce. More importantly, if the stock market doesn't bounce today, crypto is probably going to sell off, and then maybe these guys are going to liquidate some of these positions. We have been tracking the Gaussian channel. Currently, you would expect from the fractal perspective, I know I've mentioned this 2 days in a row now, but from a fractal perspective, you would expect that if there was going to be continuation towards the downside in the same way that happened in 2015, that should take place this week, because fractally, it's exactly 6 weeks after the golden cross. You have the big fake out, rejection off the top of the Gaussian channel, and then a breakthrough. The final line in the sand as a bull is, if you're trading this, the Gaussian channel with the Lucid SARs, you don't want to see that Lucid SAR break, which is at $19,300. So that's that over there. How does that line up over here? This is coming in as major support at 21,200. Basically, I don't really want to even see prices start to close anything below the previous week's candles over there, because then you negate those higher lows start to fall out of place. And there is going to be a lot of pressure over here. A lot of volatility can be expected. If you think we've seen volatility now, we've hardly seen anything. You can see the tight pressure that's building over here. The more price consolidates into this region over here, the bigger the next move is going to be. Okay, the other thing is the dollar. The dollar did break and close back above. You know what I told you yesterday? I said to you, if it does break back above this pink zone over here at 105 for the US dollar, or the DXY at least, the DXY, you can expect continuation, which is most likely going to take the dollar all the way up to this 107 to 107.5 level. That is where you expect the ultimate lower high to form, right? Most likely you start to see the dollar get faded from this region and set a macro lower high. Whether it's there or a little bit higher, we'll need to reassess at the time. But the point was, whilst everybody was FOMOing into the market for Bitcoin at 25K and the market was going crazy, we outlined this scenario weeks in advance. We said that what you want to see is, following this massive move on the dollar to the upside, eventually that's going to bounce back up, and it should either set in a higher high or lower high. If it sets in the lower high, wherever that may come, that's where you want to start to time your potential entries for crypto longs. So something to take note of. Keep an eye out on this. It is important. Liquidity. Liquidity is bone dry out there at the moment. There's absolutely nothing. You can see net USD liquidity continuing to the downside. It's red. People's Bank of China absolutely gone, disappeared, the liquidity over the last couple of days. Nothing over there. Major central banks also completely dissipated. There's no liquidity. And then USD stablecoin supplies continuing in a very, very strong downtrend. You need to see this track up. In order for a healthy market to continue, you would need to see this start to turn towards the upside. So if you are a very risk-averse trader and you're somebody or investor and you don't want to take on too much risk, you might buy much higher, but you're probably better off waiting for these indicators to start to cross green, which you can see we are far way away from. Let's see, don't have enough history, but you get the point, right? This should start to turn green over there. Okay, total 3. Continuing to the downside. Now we're starting to approach those levels around mid-range, 350 billion, 347 billion to be precise. You really want to see this total 3 start to bounce from these levels. Once you lose that level, obviously you're going all the way down to range low. At that point, most altcoins make new lows. Bear in mind, for total 3 to go down from here to here is another 15%. That means for the most part, it depends on how risky or low market cap the coins are that you're dealing with. If it does go down 16% on total 3 to the range low, some of those altcoins are literally going to halve. And that could happen pretty quick. I mean, that could happen over the course of the rest of March. So not to create fear tactics or anything, still everything is indicating that risk to reward, it's still worth the long. Only purely from the sense that you're coming to the mid-range and you are still holding the higher low. Super guppy is still green, but it's starting to contract, giving you a warning sign that if price doesn't start to rally out of here very, very soon, then you're probably going to have to close out any long positions. That is, of course, if you are trading the super guppy. Let's look over here at the Ichimoku cloud. We have started to lose these important baseline levels. That means that you're coming back down towards the cross. So it depends on when you get there, of course. If it tracks sideways and price moves like this, you're coming back into the cloud at about 20,741. These are levels that line up with the mid-range. I'll bring up the range chart in a few seconds' time. Okay, Coates moving averages over here. We've come into that important zone, right? We outlined yesterday that anytime that you come into the zone between -3.3 and -2.4, typically you get a reaction towards the upside, which is a little bit of a mean reversion play. If that happens and it still manages to hold above this section over here, then yes, you do have another high low in place. So what does that look like? Of course, higher low, and then you're expecting a higher low. Then you need to be on higher high watch or lower high watch, because if it does turn from here and you fail to make a higher high, I'd probably close out my long positions at that point, because then I'd say more than likely you're going to break that level. You then want to see this take out the next zone over here, creating a higher high to allow for that trend to continue, right? Can you see? I hope you get the picture over there. Very, very important. All right. We have the expanding pattern over here. So the expanding wedge pattern over here. This is starting to break down, but you are coming into the mid-range. This is very, very important that this zone holds. This also lines up with the 200 exponential moving average, which is the blue one over here. You can see we've basically wicked directly into that zone. Failure to hold above that level means that you're breaking below the mid-range. And then the probability is on the short side. Not only do you lose the higher low, break below the mid-range, and lose all the important moving averages and EMAs, basically it means you're targeting all the way back down to 18,200 as your next zone. If you're holding longs there, you'll want to cut, because for Bitcoin, that is a 17% move. Ask yourself, what does that mean for altcoins? All right. One saving grace for those of you superstitious folks out there could be the arrival of the bull moon. The bull moon is arriving, guys. The bull moon arrives today. I think it prints today or tomorrow. And you are coming into a support zone. So if you are superstitious, you'll be hoping that price can bounce off of this zone over here. That is really where I start to cut my positions, though. any break and close below this 200 exponential moving average, I'll be out of my positions. Again, I've outlined everything. I hope the risk is clear to you. I hope that my directional bias makes sense to you. You're going to lose this level. You already have a warning sign because you've started to lose the diagonal trend line over there. That means you break below that. You're coming all the way down, at least, at the very, very least, you're coming down back to the 200 moving average, which is another 9% down. I'd rather cut positions, see what happens at the 200 and re-add there. This is a real possibility as well. Let me just quickly outline it. This is why closing candles are very, very important, because what you may see, so everyone's watching that, a lot of stops will be placed here. There'll also be a lot of stops over here. What you could see potentially is something like that. If you see that, pretty much that's a signal to go long again. I would still rather stop out. I'm not going to try and catch a falling knife over here. I would still stop out and rather re-enter once key levels have been reclaimed like that. So we're going to need to wait to see how the stock market plays out to get an indication of what happens with crypto. Those of you who are new, by the way, I just want to say something regarding the moon cycles. They print every 15 days. Pretty simple, right? If it prints on the top, usually it means that you're going to see a downside move at some point within that region. If it prints on the bottom over here, that's a bullish move. Prints at the top, comes back down, should print it again underneath here, and then you're expecting a little bit of upside. Now, it has about an 80% hit rate. That's better than a lot of traders' hit rates with their back testing on their strategies and stuff. A lot of traders are only trading with about a 55 to 65% hit rate. So take that with a pinch of salt. Obviously, you don't blindly trade this. Use this in combination with other tools and indicators. But I just always find it quite interesting to look at because it is relatively accurate. All right, here's the range chart. Very, very important. I say this is probably the most important chart that we have right now. And you have the range high, obviously rejected off there, coming directly into mid-range. Then you have the 0.382 fib retracement level. Some people refer to this as the shallow fib. A shallow fib is the level that you expect price to react off if the market is flipping bullish. That is where you expect higher lows to form. So we did react off of that once. The question is, are we going to tap it a second time? If you lose that level, your next areas of interest is going to be the golden ratio, the 0.618. And remember, Fibonacci is everywhere. It's in nature, it's in charts, it's in human psychology and patterns. It's everywhere. So the 0.618 is often like a magnet. That's only confirmed if you start to close under the mid-range. Then you're coming down to anywhere between 18,987, or you're coming down to 18,108, which is the range low. The market is still range bound, guys. I mean, you can't deny it. Like, just look at that. Let's clean this up for you. I mean, this is very, very range bound. There's absolutely no denying. It's just been up, down. Yes, you had a deviation, up, down, up, down, up, down. So that is what the market is doing until such time as you properly clear this range like that, does a real proper trend establish. So we're not in a trending market yet, but it still could be transitioning. So that's what we're looking at over there. This is yesterday's target that we outlined. We said there's a bear flag that's forming. So there you had the bear flag, and we're expecting a breakdown. The breakdown should take price to 21,247. If price gets to 21,247 in quick order, like that, like I said, and then quickly comes back up, that would be an opportunity to enter longs. That would show you a swing failure pattern, or deviation, whatever it is that you want to call it. But that would be the target of this bear flag, at least for the time being. That's the zone that we're looking at, and then we can reevaluate from there. You can see that the volatility is low as well, and on that move down, the volatility started to expand up. This is on the 4-hour chart using the BBWP. That means that this move still has a lot of legs. If bears want to strike and strike hard now, this move has a lot of legs, whereby basically you can wait for the volatility to get overheated, and then you know that's probably likely near a local bottom. So keep that in mind with regards to your trading. I hope that helps. Yes, cool. Let me just see if there's anything important in the comments over there. Guys, do me a massive favor, hit the like button. It really, really helps to get the algorithm going. I know that there's 1,600 of you live right now, so please hit the like button over there. And then also check out the links in the description below. If you're not in the Discord, I recommend getting into the Discord. The link to the Discord community is here. Let me quickly pull up the Discord for you. I want to show you something. The Discord gives you updates every single day, right? So have a look over here. Here's all the thoughts on the market. We're giving you trade setups as well. Let's see, where's the last trade setup? Let me go back to trade setups. Here you got trade setups over here. So you got longs. There you go. That was the short trade that I gave where I told everyone now it's time to move your stops to break even. Let's go to the original post so I can show you. There it is. I gave it to you beforehand, right? Not someone that's here to give it to you after. So there's everything, guys. There's the P&Ls on the trades. Everything is in there for you. If you do want to join that, you have to get one of these sign-up links. Sign up to Bybit, OKX, or BitGet. Use one of those 3 exchanges. You do get sign-up bonuses. And then you need to send your user ID into the Discord group to get you access, right? And then you can capitalize on all that free alpha. So, guys, that's it from me. I will see you all on tomorrow's video. Have an absolutely stellar day, and let's see what the volatility brings for us. Cheers for now.